Hello, everybody. Simon Dixon here. If you are following me on Twitter, at Simon Dixon Twit, you'll know that I tweeted this morning an article which shared the 10 most trusted people in crypto. And I didn't want to name and shame any names, but certainly some of those people are not the most trusted people in crypto. And of those are legends. So I'm really curious about your opinion and who you think they are. But it also inspired me to create this video because I think one of the biggest problems in crypto is that, look, I was there right from the beginning. So when it was about 20 or 40 people in a room, and there were people that were around in 2000, that first Bitcoin conference that I spoke at in Prague. They were there in 2011, 10, round about these times. Some of them are, completely credible people. Some of them have gone on to become billionaires. Some of them haven't become wealthy at all, even though they were there right from the beginning. And it's because some of the principles that I'd like to share in this video and also combine that with why you shouldn't be trusting certain people in crypto. So that was the idea behind this video. As you may know, I've been working on some content around how to stay in the game and what I would do with my money if I was starting from scratch today in the current financial markets turmoil, what I would allocate to different asset classes and how I would navigate that and which areas you need to be diversified from in terms of what I'm actually doing. I can't give financial advice in terms of general specifics, but my goal is kind of to give you principles that you can use and you can do your own critical thinking. And that's really a big thing around who to trust in crypto. So what I did is, as part of that, from my experience of seeing so many people that were there in the beginning, so many different fads come and go, so many people get wiped out, so many people get incredibly wealthy, and so many people just lose all of their funds, gambling essentially. I put together 7 behavioral finance principles, and I'm going to cover 3 of them today. And these are the 7 behavioral finance principles. So you all know that prior to getting into Bitcoin, I was part of the monetary reform community. And prior to that, I was working in traditional finance. So I worked firstly as a stockbroker, then as a market maker, and then in corporate finance, making companies public. And although I spotted lots of the problems with banking and dedicated the last, 15 or 20 years ago was when I started in economics, to really exposing some of the problems in the banking system and also some of the alternative emerging technologies that have evolved in order to solve some of those problems. I think that there is still a lot to learn from traditional finance principles, fund managers, and the greatest investors in the game in the traditional market. And so a lot of that can be applied to building wealth in the Bitcoin market and crypto market. And even just saying the words Bitcoin and crypto is a controversial subject to some people. I'd like to go through some of the trends that I've seen over. So the 7 behavioral finance principles are really, I did a lot of study in the area of, the psychology of various different players in the financial market industry, whether it be traders, investors, and behavioral finance has done a lot of academic work. But I also want to apply that to Bitcoin and crypto as it relates to some of the people that I've seen just get completely wiped out. After that, I'll also do an AMA. So as I'm going through this, please build up your questions. I've currently got a bunch of building work going on in my building. So Azad, if it gets like unbearable noises and drilling and stuff like that, let me know and I'll see what I can do about that. But if it's not too distracting, I can hear it, but maybe you can't hear it, we'll go through. So let's dive straight into the content and then we can move over to the AMA. And Azad is on the live chat. There's a number of ways of getting your questions to us. Maybe you can engage with me on Twitter. The main way is the live chat on YouTube that we'll be looking at right now, or you can head over to my Twitter, and Azad will try and pick out some of the questions. So if they come up as we go, then let's cover those. So the subject of the video, who not to trust in crypto. For me to answer that question, I want to go through 3 of the 7 behavioral finance that I think are most relevant to the people that I've seen make it or break it in the Bitcoin and crypto industry. So the first, the one that I think is probably most relevant to the most people in crypto is behavior 5 of the 7, and that is greed, gambling, and home runs. This is rampant in our industry because I think so many people have been enticed into the market under a kind of a get-rich-quick principle. And so one of the things that I really encourage people to avoid is searching for that guru, that's going to tell them which crypto to get into. And you see all these groups of people that are all trying to pile into pump and dumps. And really this is people taking advantage of this behavioral psychological principle that we're all searching for the holy grail. We're all tapping into that emotion of greed. We have the ability, financial markets are just simply, in the short term, the emotions of fear and greed, which drive fear driving prices down, greed driving prices up. But in the long term, it's fundamental principles that actually prevail. And so because many people understand that these emotions of greed, gambling, and searching for the home run, it tends to drive people into the exact opposite type of mentality you need to make it in the investing industry. And this is really rampant in the Bitcoin and crypto industry. So when you see titles of my top 5 picks, the best crypto to get into, how I achieved 1,600% returns, you can guarantee that that type of behavior will drive you into searching for the big win, which will give you overexposure to constantly chasing a certain new, big, nice, shiny object based upon the advice of a guru. And they are never telling you all of the times that that doesn't work and all the times that lost. There's a reason why in traditional finance, fund managers that have fiduciary duties to their shareholders and to their investors are not searching for that quick, big win. They're using traditional financial principles so that when that win does happen, they've got sound money management around it. But what this tends to do is drive people into putting all their money into this one thing that some guru told them, and they're always going to get wrecked on the pump and dump as a result of that. So the behavior 5, greed, gambling, and searching for the home run, is the type of behavior that always makes you check the price every single day in CoinMarketCap, go for those gainers and losers, and try and always find, the next big shiny object. Constantly turning to other people to look for their analysis, and avoiding sound, investment principles. That is the only long-term way of really building wealth in these markets. I see this a lot, and you also see this with people not investing. So the only game here is that you've got to have to be patient and go for an investment thesis. There is, however, money to be made in the quick wins, but you've got to have some kind of principle and understanding about how you allocate and take advantage of those opportunities. Also remember, as I'm a shareholder in many of the exchanges in the industry, so I've, whether it be, I try to disclose my interest. So I built a large equity portfolio in many of the different companies in crypto. Some of those include Bitfinex, equity in Bitfinex, Bitstamp, Kraken, Coinbase, Bitso, Unocoin, and geographical diversity as well. But remember, exchanges are in the business of you over trading. The more you trade, the more money those exchanges work. I know that behavior happens. So investing, personally, I decided to invest in exchanges because of that. But also at the same time, I'd like you not to overtrade if you want to be in this for the long term. I saw as a market maker, 90% of traders lose money. I'd probably say less than 10% make money as successful traders, but it's the type of behavior that this whole gambling home run drives people. The solution to this is really that you need to be, it's a marathon, not a sprint. If you think short term, you're going to be driven to these types of behaviors, and stop checking prices, stop looking for gurus. And if you do go for a guru, make sure it's around in long-term investment principles, as opposed to them telling you, here's the top 5, here's what you missed out. Because I guarantee you, if they put all of their money in those top 5, they were also not telling you about the 5 that they lost all their money in. And that's why they're doing this type of behavior. So I've seen that so many times, and these are the same people that have got wiped out time and time again. So this is where avoiding news as well. So that's the first behavior. Really, it's the most rampant. It's the behavior of greed, gambling, and searching for those home runs. The second behavior that I saw in crypto that has led to more and more people getting wiped out is very much the opposite as well. It's called confirmation bias in behavioral economics. This is where people seek reinforcement and confirmation of their own beliefs by only seeking information that backs up their particular investment theses and belief. Now, you all know that I am a strong believer that Bitcoin is the world's best shot that we have at achieving sound money, and that Bitcoin is different from every other crypto. However, saying that, because I use found portfolio theory, I didn't miss many of the big wins. For example, I invested some of my Bitcoin into the Ethereum ICO. The reason that I did that is because I knew how much of my Bitcoin was allocated to essentially looking for the next big home run, gambling and gaming. So you can use behavioral finance principle 1, as long as you have a theory about how much of your Bitcoin or your funds you're willing to allocate towards such things, because these big wins do exist. And Ethereum turned out to be the ultimate home run. But at the same time, many of you may not remember, but there were many others that could have been Ethereum and could have been just likely to achieve it. For example, before that, there was Omni, which was one of the first investments I made in a token sale, which is Mastercoin. Now, that was not a big win, but it had the same principles of what Ethereum was looking to do. There was also Counterparty. And after Ethereum, there was all the others that came along after that. Now, all of those, most of those were really bad bets, but Ethereum happened to be a really good bet. So what people will tell you is, if they, they might lead you to believe that they put all their money into Bitcoin and they put all of that into Ethereum, then they put all of that into, Binance token or something like that, and then they put it into stable coins at the top. I guarantee you, they might have made all of these bets, but if they didn't use investment principles, that they will have lost all of it along the way as well. And I have seen so many people that lost all their Bitcoin because of that. So what is the second thing? Confirmation bias. This is I see a lot with things like Bitcoin maximalists. So Bitcoin maximalism is the belief, and I've seen so many people that are Bitcoin maximalists and lost all their Bitcoin, or because they had to spend it along the way and they didn't get some of those big wins. I'm covering a few different areas here, but confirmation bias is where they ignored all the other things because of their belief about Bitcoin maximalism. So reason this is a controversial subject is because I genuinely believe that Bitcoin is the only shot we have in the crypto market of achieving sound money. So Bitcoin is at the base of that. However, I constantly seek opportunities in looking at other people's opinions, in seeing things like, what don't I see right now? Because I've seen so many people that have used confirmation bias where they don't see the other things around them. And this makes Bitcoin better. I'll give you a few examples. For example, it's only, so many of the Bitcoin maximalists miss the opportunity of Ethereum because of their beliefs around Bitcoin maximalism. And me, I also find the same type of things. These behavioral finance principles are inherent in all of us as humans, but it's what makes us really bad and why most people, don't make money either trading or investing in the markets. But however, if you have some kind of investment principles whereby you can put some of that towards gambling, then you can you can benefit from those opportunities, still remain congruent with your belief about Bitcoin maximalism, but not use it to miss out on some of the many opportunities, and you don't overexpose yourself if you really keep yourself to those sound investment principles. So many people miss those opportunities. I do something, and the solution to this, and this is a controversial thing I've never really talked about, but I always look at the alternatives. So whenever I have my sound, my principle around what I'm doing, but at the same time, when something like Bitcoin Cash or Bitcoin SV comes along, I always look at what I'm not seeing. What are they seeing that I'm not actually seeing? From a few ways. One, to see what Bitcoin may not be doing and what it can learn and implement from that, and maybe try and drive some of the innovation in that direction by investing in companies that might be applying that to things like Bitcoin. But also accepting that confirmation bias means that you can shut yourself off from certain things. So many people would shut themselves off from listening to many of the updates on Bitcoin Cash. I've tried to avoid doing that not because I'm driving myself into changing, and being unfaithful to Bitcoin, but because I always ask myself the question, what am I not seeing? What are other people seeing that I might not be seeing? Because I'm trying to always remove a certain aspect of my confirmation bias. And then I use sound investment principles to take out many of these these psychological behavioral finance things that lead to us losing so much money that I've seen so many people getting wrecked. And also there's no shorter people that are actually going to be taken advantage of, keep trying to drive you into opportunities. It's why so many people end up in scams or overexposure to the next big shiny object. And then they use the other behavioral finance principle that I'm going to go before I start going into some of your questions that completely wreck them in this. So the solution that I'm always looking for people that I disagree with, and I'm trying to look at what I can learn from those. It can either have two outcomes. If you just constantly go to the same source of people that reinforce your confirmation of what you've decided is right, then you just end up in an echo chamber of seeing the same things, believing that what you're saying is right, and it reinforces your behavior of really thinking that you're right. And if there's one thing I've learned, that investments, people that have made lots and lots of money from traditional finance, is they're willing to be wrong, and they recognize that in order to do that, you need to use some kind of sound investment principles that I'll cover in future videos and future contents. So I'm always looking for people that I disagree with. Two outcomes can happen. One, because you're not in the echo chamber of just reinforcing what you already agree or believe, it either reinforces your belief, but this time from the perspective of seeing alternative views, or it actually allows you to see something that you hadn't actually seen. So I'm always looking for what I don't know, and to actually look at things that I might disagree with, and what is it that I might not be seeing, trying to combat that confirmation bias. Who should I be listening to that has conflicted opinions, so that I can either reinforce my investment thesis or see things that I might not actually be seeing. But remember, I don't allow that to distract me because of what I talked about in Principle 5, not allowing other people's views to drive you into that gambling looking for the home run, and that greed mentality that will destroy you in markets where people are always looking to take your money in these markets. And the final one that I wanted to go through, there are obviously 7 of them, but these are 3 ones that I wanted to cover before I actually start taking your questions, is something called the endowment effect. The endowment effect is always looking for more value in something that you already own. In terms of communities, I've seen this more so I'm a shareholder in Ripple Labs, their equity, but I've seen that people that own the XRP token, I've seen this endowment effect in that people that own XRP, the token, than any others, and also in Bitcoin as well, of course. So you've got to recognize that in crypto, there are bag holders everywhere. And bag holders are people that own a lot of the cryptocurrency, and the endowment effect means that they always see value in what they own without seeing value in other things. So often these 3 things might be, conflicting, as you can imagine. I'm telling you to avoid the whole looking for home runs, gambling and greed, sticking to your investment principles, but at the same time, seek out information from others in what you might not be seeing, being willing to be wrong, but also recognizing and trying to avoid the endowment effect, which is placing more value on things that you already own. This is a really dangerous thing as well. I see this in myself constantly as well, particularly with Bitcoin. I see a lot more value in Bitcoin, but at the same time, I try not to let that take over my emotion of not seeing other things, because then it can back up either my belief in Bitcoin as our world's best shot at achieving sound money, but also use some investment principles to not be overexposed without falling into those gambling, greed, and searching for home run mindsets. So what are the tips the takeaways that I can give from this, from 10 years of being involved in the market, from being pitched every single thing, from seeing people always trying to part you and your money? It's understand your investment principles. And the people that I know that went on to become mega, mega wealthy, they stuck to their investment principles as a primary thing. They also remained open-minded to the belief that they might be wrong, and they learned things from traditional finance not to get wrecked. And there's a lot to learn from traditional finance. These are the main things that I really like you to take away, and more than I go over to the question. And also just beware those headlines. Stop chasing the guru. Stop chasing the person that says, here's the 5 coins that you should own, because that's just reinforcing bad behavior and driving you into those behavioral gambling mindsets that's going to mean that you end up getting wrecked. And I've seen far too many people lose over the time, even though they were there right from the beginning. So if you are going to be chasing a guru, then my suggestion is look for what you can learn about their principles. Look for what you can learn about, as opposed to trying to copy exactly, the coin that they're picking or something like that. Those are the ones to be avoided. So the reason I wanted to cover some of these things, there's a lot more that I would go into, but those are the 3 of the main ones that I see that led to more people that were there from the beginning losing all their money over the time, because not really appreciating some of those behavioral finance principles and applying it to themselves. So now what I'd love to do is I'd like to open this up for questions. Hopefully that drove some questions. And also, as I said, I'm going to be covering some of those investment principles in future videos. I'm also going to be giving more live commentary on some of the things that are unwinding in the traditional markets and how that relates to the crypto market. So remember to always subscribe to my channel, hit the bell symbol, and every time I go live, YouTube will give you a notification. And also follow me on Twitter, because there's content I give on Twitter at Simon Dixon Twit. And let me know what you'd like to see in future videos, and I'll try and drive that. So I've got Azad here from the team now. He's been on the live chat on YouTube, and maybe we can pull out some questions before I have to go to another meeting in approximately 30 minutes. So got about 30 minutes to take as many questions as we can. Azad, what do you got for me?
Yeah, we've got a few questions here. I think it's just in theme of the actual subject matter of who to trust in the crypto world, or who not to trust, in other words. What do you think of Fluffy Pony and Monero? And also, what do you think of Tika Tiwari and his 5 coins, which was recently aired on London Real YouTube channel?
So again, you know, I've met Fluffy at many of the different conferences. I'm not here to really try and name and shame certain characters, but I do believe from my interaction. See, the danger in this is that you can align yourself, you know, because I'm an investor in so many different companies in the cryptocurrency sector or the financial technology sector. Sometimes you can align yourself with a character, and then they might do something that people misconstrue, and then you have this danger of association. So for me, I've tried to be completely diversified across the whole industry. My understanding of Fluffy Pony is that he is a Bitcoin maximalist, but he also recognized some of the weaknesses in Bitcoin and joined a community that were focused on the privacy-centric side. But I think he maintained and stayed true to his beliefs, and has always pitched different things for different use cases. So from what I can see, he's followed his principles. But again, you know, I don't follow everything that these characters are doing. In terms of things like the 5 crypto picks, you know, these are the things that are going to be driving some of the behavioral, behavioral finance policies of trying to search the guru, and then a load of people are going to get into these top 5 based upon that recommendations. You don't know when they're selling, you don't know when they're buying, and you don't know whether they're telling the truth, and they're not telling you the ones that they bought and sold, because this type of behavior of searching for that holy grail is always going to lead to them having a load of positions that they might get wrecked on. And so these types of behaviors can be really, really dangerous for people, because really it's the investment principles, it's the long-term strategies that are going to work. Traders lose money. That's what they do. You know, the professional insiders is in a zero-sum game. The professional insiders make all of their money out of the people that are trying to trade and trying to chase the winners. You might get a home run, but that type of mentality and that type of strategy of chasing these guru winners and their top picks is going to be the same thing that ensures you get wiped out eventually, even if ever you follow the winners. There's empowerment in being able to understand how to build a portfolio that works in any market, whether it's inflation, deflation, whether we're going to Bitcoin halvening, whether they're not in Bitcoin halvening. And these are the types of things that I've seen from the people that have really built long-term sustainable wealth. They're not chasing that next big shiny object.
Thank you for that. Okay, we've got a few other questions. Let's see. TT is a pump and dump. Too many insiders. We've got a few statements here, not so much questions around the subject of who not to trust. But
our industry is rampant with pump and dumps, and there is a cure to pump and dumps, and that is just not engaging in them. Because Bitcoin has pump and dumps all the time, and that's why the traders lose money and the investors 9 times out of 10. You know, the normal person, you're going to get wrecked in those markets. You just are. You need to be an insider to make those things work, and it's the type of behavior that will drive you to eventually losing everything, because you bet everything on the one horse.
Okay, we've got a question. I've sort of asked the question already, but this sort of continues from it. A lot of people have been watching London Real, so we've got quite a few questions around that. And some have said the reason why they're suspicious of people like Tika Tiwari is because of the way he's trying to market the 5 coins, talking about his private jets. You know, there's a lot of people who are out there sort of coming out with these lines and appearing on very popular YouTube channels like London Real or the likes. What's the sort of danger around that? Why is it that people naturally gravitate towards the fact that they're highly suspect of this, and then versus the people who really jump on the bandwagon?
So I love Brian Rose. I think he's done an amazing job. I was an early guest on his show with Max Kaiser very early on. I think it was about 2013 or something. Max and myself were on the show. I think, you know, London Real's philosophy has always been, let's let people speak. We'll make the, you know, you can make the decision. One of his campaigns right now is really around, and I love the work that he's doing around freedom of speech. He's been, you know, on the wrong side of censorship at the moment. And I believe that what he's doing is really interesting. But I think that encouraging the types of behavior around here's the 5 crypto picks is really a symptom of somebody that probably doesn't actually, you know, they're not in the trenches of the day in and day out of this industry. And so they may not really know. It's very easy to create perceptions of who people are. I don't know who that person is. I've got no idea. I've been involved in, I'm not talking about London Real. I love what London Real does, but the person that you mentioned, I've never heard their name. I've been involved in crypto from the beginning. Maybe there's something that I'm not seeing, but if somebody is like the most trusted in crypto, I think I would have heard of them by now. And the article that I shared this morning is, you know, I don't want to name names because that's just not what I do. But some of those people are absolute legends that should be on that list, and others shouldn't be on that list at all. Certainly not. So it's very easy to get, you know, it's why billions and billions have been taken out of people in scams like, you know, OneCoin was using the ignorance of people to drive people into scams. And there were many people that didn't know that these were scams that were promoting these things. I'm not saying that that's a scam. I'm just saying that's the type of behavior that will drive people into the type of behavior that will part them from their money. You know, so many people are in the OneCoin scam, the Bitcoin, the Plus token scam, billions and billions was driven out of people because it's people that don't necessarily understand the subject that were driven in by, you know, the headlines, the promise of returns, the ginormous figures. You know, and the problem is that because some cryptocurrency, you know, because Bitcoin produced such high returns, and it was such an anomaly in the financial markets and has been the highest performing asset class for so many of the last years since it was created. That can drive people into this whole gambling, seeking home runs mentality, and therefore seeking out the gurus. And when people can use things like private jets and things like that, it's just bringing out the behavior that tends to make people lose their money, even if that person made loads of money. I don't know who this person is, so I'm not questioning whether they did that. They probably did make a load of right calls, but I can assure you that if they put everything into you know, these types of things, that unless they're using sound investment principles, but those types of sensationalized headlines are the exact type of things that really cause a lot of problems in the crypto market, and reinforces that behavior of what's the next big crypto, what's the thing I'm not seeing. Here's what I know. Speak to the best of the best of the best in even the traditional investment industries. I'm talking about the Ray Dalios of this world. They all come from a principle that very few people beat the market. They build portfolios to ensure that they win in every single market, and they appreciate that that they don't know that even as insiders, they tend not to know things that the market knows. So this is just driving people into pump and dumps. You might get on the right side of that. You might do that 5 times in a row and it work in your favor, but it will be the 6th one that wipes you out completely if that is your long-term strategy. I don't know people that that have survived the markets for as long as I have and others, following these types of following gurus and their next pick. In fact, I was a market maker on the London Stock Exchange, and we used to use this at the investment bank. At the time, there were magazines called Investors Chronicle and Shares Magazine, and I was a market maker for the alternative investment market. And we used to know that these types of principles obviously exist. The book, at the investment bank, we were long-term investors. But all these traders in the middle as market makers, we used to get the stocks that were being picked or covered in Investors Chronicle. And that would be the sales traders like Goldman Sachs. They'd be calling us to sell into that position. But because it was covered in Investors Chronicle and it was a top pick, there would be some kind of momentum, and a market maker can drive the price in the direction. And that is then loaded to offload some of the institutional positions onto the people that are just looking for the next big guru and the next big pick. We saw that repeatable time and time again in the traditional markets, is rampant in the crypto markets.
Okay, I think there are 2 very similar patterns that I'm seeing in the questions that are coming through. And just want to say a big thank you to those who are submitting the questions. We're seeing quite a spike in the number of people joining us in today's live AMA with Simon Dixon. So thank you very much for that. What I'd like to say, just in the theme of everything that we're discussing in terms of who not to trust in the cryptocurrency space, I'm seeing 2 patterns. There are people who deserve the right to be classified as the expert, as the go-to person, or the real deal, if you like. And I can certainly say, in my opinion, people like Andreas Antonopoulos. So there are people who are saying, yes, trust Andreas Antonopoulos, which I'm not going to disagree with. But then there are those who are saying, who is McAfee? He's just an entertainer in the space. Could you sort of distinguish those 2? Because there is a wide spread pattern, and with all these YouTube channels and people bringing them in, we're seeing people like Brian Rose, who we highly respect in London Real. People are coming to him and they're having a hard time, I think, in my opinion, of distinguishing who is the real deal and who should they have on their hot seat, versus those who are pure entertainment, purely there just to pull in and drive in whatever their agenda is. Why is it that this is the case of these 2 type of people?
Well, everyone else has to make their own decision, but Andreas has, he entered the market a few years after I did, I think about 2013. And you can look at the consistency of his work. He's been principle-led, consistent, willing to be open-minded to, he wrote the pinnacle book for developers that want to understand the technology behind Bitcoin. I've met him on several occasions. And I've always found him to be a principle-led person. He was also open-minded enough to start looking at how Ethereum drives different use cases for different things that fitted in with his principles. So he's a big proponent in the power of decentralized governance and the technology side of it. So that's what I would say makes someone like Andreas such a consistent player. He also never gives price predictions. He knows that he also, whenever people ask him whether he should be buying or selling, he's telling people about sound principles like dollar cost averaging, which I think is a responsible thing to do. Now, take the exact opposite of that. Someone like John McCarthy. What I've seen of John McCarthy is that he's just always switched and pivoted to the next big shiny object and tell the whole world, very lavish headlines around why they should be in that thing and why all their money should be there. So he'll tell the whole world, Bitcoin's going to $1 million, or I'm going to eat my, you know what, for those of people who've seen it. So everyone, the followers that are chasing the next shiny object, put all of their money in Bitcoin. And he was doing that around about the time when it was in the parabolic bubble. Then I think he switched everyone to Bitcoin Cash, joined a certain community saying everyone should switch over to here. Then he was looking at ICOs and saying everyone should put everything into this. Now he's looking at various different things. So you can see a non-consistency in his principles around this. Now, you got to look at whether the principles are matching those things. And so I think people that have followed John McCarthy, maybe he got a few calls right, but my guess is that most people have got wrecked because, again, let's not blame the person. What's empowering? What can you control? The only thing you can control is you. What you're going to do. Remember, the crypto markets, apart from the scammers, the genuine Bitcoin markets, they haven't taken any money from people. The stock markets don't take money from people. It's you buying and selling at the wrong time, over trading, getting into mutual funds that might be paying excessive fees that deplete away your pension. It's not understanding the game. So the only thing we can control is how we think about this and the principles that we put around that. And these are the things that separate you. So I've tried to cover 3 of the important 7 behavioral finance principles I've seen that's led to people losing their money. And by following these people that are telling you, put all your money here, this is, and just pumping things with a congruent belief that they can't be wrong are the telltale signs, really. I do believe in, sticking to a belief in principles. You have to align yourself with those principles, but also determining who you actually want to follow. How did they actually make their money in crypto? If you're trying to make money out of crypto, or within the case of Andreas Antonopoulos, he's deep into the technical side. So if you want to learn the technical side, in my perspective, there's the economic effects based upon somebody that comes from a technical perspective. From my perspective, there's no one else better to learn from. And I got a lot of respect because he stuck to his principles over the years and he's been willing to change. And just because people change their principles and then actually announce why they've changed those things, that's an important thing to look at as well, as opposed to the person that just is always pushing you into the next shiny object with sensationalized headlines, and fooling you with things. How did the OneCoin thing, Dr. Ruja, when she scammed so many people out of so much money, she had all the things that people were looking for. She had a good background, a good education, but everything she said was, spaghetti jargon. It was just, nothing made sense, but that fooled a lot of people. So you got to look at, the people that have been around for a long time, and been through several iterations, and how much have they deviated from their principles? And when they have deviated from those principles, has it been done in a responsible way, I'd say.
It's a great answer there. Thank you very much for that, Simon. Right, here's another thing that I'm seeing amongst our dedicated listeners here who are joining us today. Luke, we're getting people who are saying, don't trust nobody's opinion but your own. Now, I see this as something I hear quite often, but it inevitably always turns to that they're influenced by somebody on Twitter, a friend or whatever. What's your sort of response to people who'd say, study the space before investing, don't trust anybody's opinion but your own?
I think it's particularly in the crypto and financial markets, traditional financial markets, Bitcoin market, crypto markets, all these markets, you definitely want to come from a place of skepticism. But the important thing is learning and empowering yourself, because I think there's lots to learn from so many people. but following and putting too much influence on individual picks and their ability, because there's always something behind that you don't know. So what I say from you is come from a place of skepticism. I think that's very useful. I think that, the whole mantra in crypto is don't trust, verify. And I think that's very useful. But at the same time, don't come from a place of skepticism whereby you're not open to actually listening, because that can be just as dangerous. And what I think, my mantra is that there is only one truth, and that's the long-term market. The short-term market is complete noise. The short-term market is full of pump and dumps, people pushing their own bags, endowment effects, fear, greed, manipulation, insiders. You're not going to win at that game unless you are one of those insiders. So what I think the only truth is the long-term value of the market. And so what I would encourage everyone to do, and this is one of the things that I've been trying to think about myself as I've been pulling out a lot of what worked and what didn't work. And believe me, I've made every mistake under the book. I've lost a lot of money, but I've made a lot more money in the industry. And that's really the key thing. And now I think the financial products that are coming out in the markets right now allow you to lose many of the traditional investment principles that lead to the long-term success of some of the greatest investors in the industry. And I think it's about applying and learning some of those things. So, don't necessarily take, if I tell you one certain thing that I'm doing, it's about understanding the rationale behind that, so that then you can apply that to some kind of, principle. And one of the things I've been talking about with my doing this old blueprint thing of, if I were starting from scratch, what would I do? It's not for you to actually follow the individual picks of what I do. It's about finding a mechanism for being able to give you the tools that will lead to you not losing your money and having a long-term investment thesis and principle. And then me actually taking my money live and showing that I put it exactly behind the principles that I've come up with. Really it's about, taking away much of the emotion and desire and need to have to follow people's picks and focus on what's going to work and what's right for you.
Thank you for that. Okay, there's two things that I want to mention, two names, and I want you to respond. Yesterday,
you're really trying to take me down this gossip path, aren't you? Go on.
Well, actually, you had a meeting with Max Kaiser yesterday, which is going to be aired today, right?
I did a podcast interview with him yesterday, on Warren Buffett, what he's been doing recently,
right,
and the Bitcoin halving.
Okay, so
today, in fact.
So these are two very
rip it out and put it on YouTube.
Yeah, these are two very influential people, big people in the investor world. So Ray Dalio, Warren Buffett. People trust their words with gospel. These two dislike Bitcoin. Explain.
Well, Warren Buffett, if you look at his whole investment theses, is around so he said, my number one rule is don't lose money. My number two rule is look at number one. And he's made all of his money from buying when people are fearful and selling when people are greedy, but not over trading. There is tons to learn from Warren Buffett that you can apply to crypto. Ray Dalio is probably one of the people that I respect most in the world in terms of consistently being able to produce returns in a $160 billion hedge fund when most people tap out at $15 billion. And what you can learn from him is things like his all seasons portfolio, where he recognizes he recognizes that he can be wrong. So he puts together a portfolio to perform in all seasons. Now, both of those, their principles. Now, remember what I said about confirmation bias. When you are in the traditional financial world, you will have a huge confirmation bias away from listening to Bitcoin. You'll also have a huge endowment effect because all of your wealth is invested in certain principles that have worked for you, time tested. A lot to learn from both of these people. But then you need to extract what not to learn. And what not to learn is the fact that there is this new emerging investment thesis that I invested into, which is that the world is going to need to own their own money, spend their own money, and have a monetary policy that's based upon mass and code and doesn't change. I believe that Warren Buffett has just simply reached an age where his behavioral finance is shutting off the possibility that a world exists outside traditional finance. So these effects, these three, there's some of the other principles that I'll cover in future, but these three things you can look at. He's not susceptible to greed, home runs, and those gambling. That's what made him successful. Not falling for any of that stuff. He also never overtraded, so he doesn't pay massive amount of tax, excessive fees, constantly trying to find fund managers that are beating the markets. He just simply looks for value, holds it, never sells, and uses his principles. They're completely well defined. Now, I believe that some of his endowment effect and confirmation bias might have led to him ruling out Bitcoin as an alternative, as a hedge against exposure to traditional financial markets. And by the way, although I strongly believe in the alternatives, I also hedge my exposure against being wrong with traditional financial products. That's a really important part of staying in the game. You want to stay in the game. That's the big thing that I've learned after, over the last 10 years, that it's the people that have stayed in the game that you need to learn from. They're protecting downside exposure. And also remember Warren Buffett's investment principles: don't lose money. Bitcoin is a highly volatile market. And there are the opportunity for massive losses, especially if you're over trading, you come from the short term, and you have some of that gambling mindset that drives you into, following the top 5 crypto picks. That can be rat poisoning, Bitcoin. And so I can understand where Warren Buffett comes from. But I believe personally, my investment principles, that he's got this one wrong. I believe that Bitcoin is a hugely important new emerging asset class, and the ability to protect yourself from some of the exposures of traditional finance is very important. Now, Ray Dalio, I don't believe that he is a Bitcoin skeptic personally. I've seen some of his older comments in bubbles. Someone like Ray Dalio has to be ultra careful about what they say. But Ray Dalio, he hedges using gold, and he has that as a big part of his portfolio theory to hedge against, certain inflationary events. But he also combines it. So there's a danger in people looking for that gambling mindset, that guru effect, looking for the one person to listen to. And because Ray Dalio's bought gold, they then say, I've got to be in gold. But what they don't know is what's behind the scenes around what he's actually doing. I would be very surprised, amazed, if Dalio didn't actually own some Bitcoin because of the principles that I know that he follows and some of his beliefs. My guess is that he's just at a phase right now where, until something like an ETF exists, where products that have a fiduciary duty to traditional investors, then you might start to see further things from him coming through. So, this is, I believe that it's just a symptom of Ray Dalio picking what he says when, and being responsible and careful because of some of his principles, given the audience that follows him around the world. That would be my best guess.
I know we've got 5 minutes left. I know we're short of time, but just one more question, if that's all right, Simon.
Yep, let's do it.
But before we do, I just want to once again thank everyone who's joined us today. We've got over 165 people who've joined us early this morning. So we'd love for you to hit that like button, smash it, Simon, he's basically come out of his woodwork. He's for a number of years working on some major projects and, making a lot of stuff happen. But in this crisis that we're all in, with a lot of people panicking about the downturn in the economy and everything else that's happening, we're getting a whole bunch of different type of people now joining and following Simon. And when they do, they're like having that crazy aha moment, saying, "Where the hell has this guy been? He's making a lot of sense," etc. So
yeah, well, over the years, as you know, Azad, I've at Bank to the Future.
But that's not the question, Simon. Just to let you know. I just want
Well,
to say.
I will answer that and do your question after.
Okay, cool.
At Bank to the Future, we've only been able to work with sophisticated high net worth investors, and therefore, we've been working with, and we've got 85, one of the largest community, 85,000 of them. And we got them into many of the crypto exchanges and also many companies that went bust. But more importantly, we saw the effects with our investors of not having some of these sound portfolio theories. So we wanted to spend a bit more time to protect our investors. But now I think that these principles can be valuable for everybody. And so in this current crisis, in this current, I want to come out a bit more, build the following, step outside just working with, a select group of, a large community of high net worth investors, and try and, I believe that the principles of the 1% can certainly be accessible by the 99%. And that's really the goal.
What's
the question?
Yeah. So yeah, guys, smash that like button. It really does help. It helps the people who need to be listening to things like this. This subject matter of who not to trust in crypto is quite important, as it's not just something we randomly thought about and let's do it. It's over a number of years, and seeing the patterns and seeing those people who are falling into those particular traps. So I'll put a shameless plug in. I am working with Simon and acting as his PR and JV partnership. So anyone who's got contacts out there with the likes of any sort of big names, people that Simon should be having interviews with, or we interviewing them, let us know, get in touch with me. Smash that like button. Okay, one final question, Simon, and this was brought from our team member, a man who chose this question. Your thoughts on Decred and Monero, 2 minutes.
Again, these things have if I start giving you my opinion, then I'm encouraging the behavior of people looking to me as the guru for the next big quick, so that next big thing, so they can try and make the next big win. What I would say is that you've got to understand where this fits into your investment portfolio and recognize that all of these are gambles. So Monero does have use case, and that is that because of its privacy-centric features, it's got a lot of adoption on the dark web. And therefore it has genuine utility, and Decred comes from a place of, trying to improve governance. But I think it's the important thing is understanding where this fits in and recognizing that these are all gambles. And these gambles, you need to understand what amount of money are you willing to gamble,